Welcome, dear traders. After yesterday's statement by the head of the Bank of Japan, Japanese financial officials were once again forced to comment on the state of the markets. Today, the US Treasury Secretary gave her assessment of the US economy. According to Janet Yellen, the Fed is performing strongly and the country's economy is on the right track while maintaining a high degree of stability. Whether these optimistic comments are in line with the reality will be seen today after the release of the US Nonfarm Payrolls report. Meanwhile, let's return to the Asia-Pacific region and see how its major currencies traded on December 8. The Japanese yen saw its biggest one-day rally against the US dollar on Thursday. The currency reacted to a moderately hawkish speech by the head of the Bank of Japan before the country's parliament. In his speech, Kazuo Ueda signaled that the central bank may abandon its negative interest rate policy sooner than expected. At the same time, he even mentioned several options for exiting the ultra-loose monetary policy. As the main condition for the changes, the policymakers cited sustainable wage growth and an increase in inflation to the 2% target. So far, the economic reports released today look disappointing. Third quarter GDP data showed that the economy contracted at an annualized rate of minus 2.9%. Quarterly, between July and September, Japan's GDP shrank to minus 0.7%. At the same time, the wage growth accelerated to 1.5% from a 1.2%, and this indicator is at 2.5 times behind the basic consumer levels of 2.9%. That's inflation-adjusted real wages have not been rising. On the contrary, they were falling for 19 months in a row. Nevertheless, this report still looks optimistic as the decline has reversed. As a result, the yen strengthened amid hawkish comments from the head of the Bank of Japan and continued to hover near 144 early Friday. Yesterday's rally took the Japanese currency to 4-month highs, and the weekly gains could see a jump of around 2 and 3%. However, the rebound in the US Treasury yields early Friday revived demand for the US dollar. The greenback's strength, combined with a downward revision of Japan's GDP data, led to a moderate sell-off in the yen. As a result, the dollar-yen pair has been trading in the bullish range of 142.40 and 144.40 during the Asian session. The next support levels are located at 142.30 and 142 points. The pair may test the multi-month low of 141 yen and 60 cents that was reached yesterday. Whether the yen will hit new highs depends on the US dollar and the market's reaction to the November Nonfarm Payrolls report. Today, the US dollar rose against its 6 counterparts, climbing as high as 103.70 in Asian trading. The US dollar rose moderately within the daily range of 103.40 and 103.70 in anticipation of the key employment report. After the positive assessment of the country's Treasury Secretary Janet Yellen, we should not expect any unpleasant surprises from the report. Our forecast assumes a moderate growth of new jobs by 170,000 and 180,000, while the wage rate should slow down by 3.5% and 4%. The Fed will be able to soften its monetary policy if these conditions are met. And in this case, the US dollar is likely to fall again. In this case, the greenback may test the support levels at 103.20 and 102.50. And the next resistance level is in the 104.20 and 104.80 range. Even though traders are reluctant to take risk and make aggressive bets ahead of the US data, the Australian dollar, which is sensitive to such sentiments, soared early Friday. Most likely, rising oil prices were the main driver for the Aussie as a commodity currency today. In any case, the Aussie dollar pair is maintaining a moderate uptrend for the second day in a row. In Friday's Asian session, the Aussie managed to consolidate above the key psychological level of 0.66, maintaining bullish momentum within the boundaries of 0.6592 and 0.6621. The levels of 0.6630 and 0.6448 will likely offer resistance and support respectively. Meanwhile, the New Zealand currency came under heavy pressure from domestic data. New Zealand's third quarter manufacturing sales report fell to minus 2.7%. The country's commodity prices also fell this week. After rising 2.9% in October, they fell to 1.3%. Against the backdrop of a weak demand from China, New Zealand's main trading partner, all these downgrades could be signs of a recession. As a result, the kiwi retreated against the US dollar to 0.6150 and continued to fall within the daily range of 0.6140 and 0.6180. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you next video.